Hello guys and welcome back to the channel. So Tesla is completely collapsing after reporting its Q3 deliveries, and I thought I had to make a video about it, but a bit different than what everybody's making a video on it. I want to explain to you why this is happening and what you can expect as a long-term investor. So it's going to be a very interesting video, and as always, please make sure to hit the subscribe button if you like this content, and please check out the first link in the description box below if you want to support the channel on Patreon and help a European guy survive the winter that is coming. So your help is much appreciated. So Tesla missed its Q3 Wall Street expectations. Let me make my face smaller. So it's important to note that they didn't miss on their own target. Simply they missed on Wall Street expectations. And what do I mean by this? I have pulled up for you what they have reported, and you can see that they made 365,000 cars, almost 366, but they only delivered 342,800, and this is because they had a change in how they deliver vehicles, and they explain it very nicely. There is a very good reason given, and as an investor, I accept this reason. So the reason that they are giving is that they have always had this end of quarter production push, and let's say they take the Chinese factory, and in the first few months of the quarter, they were focusing on, let's say, Australian production where they have to ship cars. And then in the last month of the quarterly production, they were focusing on China. So almost every car in the quarter was delivered in that quarter. So this basically explains this drop. And let me show you why this is completely correct. Here you can see that there's the difference between production and deliveries is almost 22 or bigger than 22,000. In Q2, you can see that this difference between the production and deliveries was only less than 4,000 cars. If you look in Q1 2022, it's about 5,000, the difference between production and deliveries. And in Q4, it's also less than 3,000. So you can see that it's correct what they're saying. And here's the interesting thing. If you add back, let's say 15,000 to average out, let's say that the difference should be around 4,000 cars. So if you add back 18,000 as a difference to this 40,000, then the deliveries would have been 361,000, which is still a hair less than what Wall Street was expecting. But here's the funny thing. So Tesla is still on target to grow 50% per year. Obviously, we need to see if they reiterate this. I do believe that they will. They are going to report the Q3 financials in about 2 weeks from now on Wednesday. And it's very important that they reiterate this, but they seem to be very well on target. So they missed on Wall Street expectations, which wasn't even their own projection, and everybody on the street gets a sissy fit. But here's the problem. The earnings miss was not the only thing that was destroying the stock. So it seems like there is shortened delivery times in countries. This is a very funny problem to me. So the basis of this fear comes from the fact that auto companies are very cyclical. In recessionary times, they do horrible. So the Fed is very much increasing the interest rates, and they have increased it way more than people thought that these rates would be increased to. And no one has tested, I even did a video about this, no one knows what Tesla's demand looks like with these very high interest rates, because they are selling $50,000 to $60,000 cars, and people are obviously not paying cash for these cars. And the monthly cost on the car, because of the increased interest rates from the Fed, is way more than it used to be before. So they have a huge backlog of demand, but they have this headwind of, very much increased monthly prices. And we know that in recessionary times, people do tend to save on cars. But here's a very interesting thing. But first, I want to show you that even yourself as an investor can come and you can check that this used to be a year everywhere, right? So you can see that a Model 3 in Australia, you would get it between February and May next year. So that's 4 to 6 months away. But if you switch this to the United States, then you see that suddenly it's between October to December. And October is this month. So maybe you don't even have to wait at all for your car. Then you go to Canada, same thing, October to December. Then you go to Europe. Let's go to our lovely Sweden because I'm from there. And you will see January to March, which is 3 months to 5 months from now. So this is greatly concerning investors because it feels like the demand is falling off a cliff, right? Here's a really funny thing. There is a human psychology involved in this. And look at it this way. When the Fed is increasing interest rates, it's going to feel like everything is way more expensive. Housing is more expensive. Your car is more expensive. But what happens when the interest rates plateau? Then you get used to it. And then the moment the Fed goes from 4% to 3.75, suddenly people are going to start buying again because things are cheap. And this is really what's happening with Tesla deliveries, that in 2016, 2017, I remember following the stock. And then the wait times were 3 to 6 months. And, Tesla was very a backlog driven company. They've always had this backlog. And the crazy thing was that they were increasing the production like crazy, but the backlog was even growing faster. And the backlog reached a point where Tesla had to raise prices to bring down this backlog. They even stopped selling, I believe, the long-range Model 3 in the US because there's just no point in ordering a car that you're not going to take delivery of for, more than a year to come. Consumers cannot plan with it, and it's just a mess, right? So they decided to stop delivering it. And now you go from this crazy overextended delivery time back to 3 to 4 to 5 months, and people are freaking out that the demand is going away. And here's a very interesting thing. What are the levers that Tesla can pull to increase demand? So for example, if people know that, okay, I need a car now, and if I order a Tesla, it's going to take me 2 years to get the car. You're just simply not going to order because it's not a solution. So you're going to buy something else. Actually, that's what happened to me. And I ordered originally a Model 3 when the Model 3 car was announced, but my lease went out on my car and I needed a car, and I ended up buying a Nissan Leaf because the Tesla was not out. So now that the delivery times shorten, the demand should increase back up because now it's feasible again to plan and, order your Teslas. So this is very, very overblown. And keep in mind that this year Tesla has increased their prices between 20 to 30%, while the metal prices and the raw material prices have been falling. So most likely Tesla has a great increase in their gross margin, and they could decrease their prices without losing any gross margin, which would again increase demand back up. And they're doing zero advertising. So I think that these fears are very, very overblown. And still, this is not all of the problems. So we have the overhang of the Twitter Elon Musk trial, which is also going to happen in October. Obviously, investors hate uncertainty, and we don't know. Maybe it will come up that Elon had a 7th wife and a 15th kid, and anything can happen, and I understand investors are worried about this. And the second thing is that AI Day was completely botched and misunderstood. And I don't think this is Tesla's fault because, the event was a recruitment event. It wasn't from stock investors. But I think that people took this negatively. I'm making a video on this, but this is potentially very, very good news for long-term investors. And it's, every time the market misunderstands something, it creates an opportunity if you really pay attention and understand it. And I know the viewers of this channel who are subscribed are very smart investors. So I know that you understand this and we don't need to explain it. So I want to give you a note on Tesla's current valuation. So if you're a Tesla shareholder, please let me know if you're worried about the current price movement. And I want to know what you think. But here's the way I look at it. So if they reach the 50% target, their Q4 GAAP profit might be around $5 billion. So that means that they have an annual run rate of $20 billion of GAAP profit. Let me tell you, there's very few companies on the planet that does $20 billion in profit per year. So the current market cap after this fall is $757 billion. That puts Tesla's PE very soon in Q4. So that's in 3 months, but it is a forward PE. Don't hate me for that. At 37.85. For a company that is growing 50+% per year. And that's just the car business, right? And then you have the robotaxi business. Then you have the energy business. Then you have the AI bot business that is completely, there's zero assigned to this in the valuation of Tesla. And let me tell you, I think that this valuation currently is a joke. How big of a joke? Let me show you Twitter's valuation. So Twitter has a PE of, oh, I'm on the wrong company. So Twitter has a PE ratio of 169. So the dumpster fire of a company, Twitter, that is suing Elon Musk is, what is it, more than 4 times as valued by investors as Tesla. Just think about that. That's how ridiculous the market has gotten. So what am I doing as an investor? I'm a very lazy investor, and if you look at my portfolio, I don't like investing in a ton of companies. And what I like to do when I invest on the long term is go all in on something that is going to, change the world. And I know that they're going to grow for the next 10, 20, 30 years. And all I need to do is, check the quarterly conference calls and make sure that the company is pulling through. So let me give you examples of this. So I want to invest in companies like Apple used to be when the iPhone came out. So that when the iPhone came out, Apple was $20. It's today $141, and we're in a bear market, right? Or the same thing that happened to Amazing Zone, right? Look at this company. It was basically riding a trend, the shopping, people going online. It was a new thing. It was riding this trend, and it went from, nothing to a very substantial amount. And if you were a long-term investor and not trading, honestly, it didn't matter if you bought here or here or, here at this bear market, you made out like a bandit. And I could show you, Netflix is such a company. Shopify is such a company. I believe Palantir is going to be another company. But this is what I like to buy. And as a very long-term investor, this is an early Christmas gift for me. I don't know if there has been a time in history when, someone who has such a record on getting things done, when people think it's impossible, like the, making EVs mainstream, like landing rockets, and, so many ton of things. Sure, the timeline doesn't always match with Elon, but he ends up delivering, right? So the lower the stock price goes, the happier I get, and I just have a gigantic problem, and I need to look for ways how to find money to invest into this stock. So this is my opinion. Obviously, it's not financial advice, but let me know what you think. How do you react to this price drop, and what is your plan? And if you watched this far, you're really an OG viewer. I really appreciate you. Please make sure you're subscribed if you haven't yet, and I will see you in the next video. Ciao, ciao.